What is happening on the chart? What is up, YouTube? It doesn't happen very often that I go live twice, but today is such a day that I do go live twice because I got when there is volatility, I get lots of questions in Discord and also in Telegram. Yo, are you going live? Yeah, of course we go live and observe the price action together, because of course now that we had this move, some stuff changes, which is always nice to talk about. So that is what we're gonna do in this video. Well, live stream, right? And I definitely have some stuff to say because right when price kind of like took the high, I already analyzed the chart, wrote on Discord to Silver, and I was just observing what was happening here at resistance. And we are now ranging just above as well. But yeah, I definitely have something to say here. So what's up, Jen? So what we're going to do in this video, of course, or this live stream, not too long ago we were live, right? About 1.5 hours ago, we stopped a 2.5 hour live stream, and here we are. So what we're going to do is shortly cover the previous live stream, only a little bit of the local stuff. And then we now, of course, with this push up, have a couple of other things to talk about. So yeah, that is, I think, very interesting. Because now that price took the high and the probabilities played out of this being a three-wavy look, remember, more of a three-wavy structure, and price now taking this high here, we can analyze the chart again, pretty much. So that is what we're going to do. Again, we are at resistance here, right? We have the blue box. See what price does now that we are live. We were live over here. Nothing happened. I stopped at about, what was it, like this candle here. This is where I stopped the live stream. And then I spilled my drink on my keyboard, went into an accidental full-sized, maximum size 200x market long on Bing X and caused a pump. But that, you know, I sold it now. So that's, of course, sarcastic. So yeah, we're gonna see what price, what Elliott Wave scenarios we have now, what to look for now. Lucas on the treadmill. There you go. Time for a walk. Good to see. Welcome, Lucas. And Trading Queen, Salman, back again. Just checking your channel. Here you are. Checking the live once again. Yanis, how you doing? Glad to see you yeah, again, right? Amul, welcome. Jen, what's up? Good to have you here. Time to learn. Another live stream, Joel. Exactly. Alex, what's up? How you doing? The 9-hour live stream guy. I will probably never forget that. He did a 9-hour live stream on like sitting behind the charts during it was the ETF day, I believe. The ETF news day, I thought. Oh boy. But afternoon pump, exactly. Zach, what's up? Can you explain regarding Forex trading? I only trade crypto. I don't trade anything Forex related. The Herc, love seeing another live. What's up, Herc? Thanks, man. Hope you have a wonderful day. I do. We had a live earlier. This is the second one. It's not 9 hours together, but one day I'm getting there. Mateus, what's up? You still in bed? Or you getting better now as the day is continuing? Wade, hello, sir. Will Bitcoin go down? Can I open a short position? Well, if you opening a short position is something you can do anywhere, of course, but we will observe the chart here and remain patient. You can open longs and shorts everywhere, but of course it's about a plan and a strategy and risk management on number one. So we're gonna analyze the chart. We're gonna analyze it. No problem, Amol. No problem. But yeah, I'm very much crypto and especially Bitcoin focused. So Mr. Burke, shout out. What's up? Adrian, how you doing? Okay. Mr. C, by the way, what's up? Let's get started then. And I'm going to park you in the right top corner of my second screen. And we are very, very shortly, this time very shortly, because the previous live stream was 2.5 hours ago. So I'm not going to repeat the whole thing, right? But very shortly, we go through the folders we have. And we're going to cover what has changed now, because of course stuff has changed. Okay, first things first. By the way, actually on a low, even on a low time frame, of course, stuff has changed. So this is going to be sure. I'm here to learn. ZAR, is that the South African Rand? The Herc, welcome. You may be South African because of ZAR. No? Thanks for the dono, man. I appreciate it. I'm here to learn. I'm happy you are. I love the proactivity of learning. But ZAR, I think you are from South Africa. If so, my fiancée is from South Africa. We will marry after 6 years being together in South Africa in March. She is from Cape Town. So I will be forever related to the South Africa and Cape Town, to be more specific. Okay, let's get started. This is the same order as the previous live stream, but I have to cover it shortly to give the context of what happens locally, especially for new people coming in. No? So the bearish scenarios, we're looking for an A or 1, 2 or B, and then a C or 3 to the downside. However, this wave B or 2 has to be a 3-wave corrective structure. The higher this move to the upside goes, the lower the probabilities that we are in a wave B or 2. Because if this is going to go up in a straight line, well, that's not a corrective structure we like to see in B or 2, right? We want to see a 3-wave corrective move in an ABC, WXY, anything that is 3-wavy and gives us higher probabilities of it being a corrective structure compared to an impulsive structure. Target area for B in yellow, 382.886, 42.5, 47.9. Target area 2, 05786, 43.8, 46.8K. Invalidation is, of course, price taking this high over here at 49K. Remember, we want to see a 3-wave corrective structure, right? That is what we're looking for in B or 2. If we go to the bearish/bullish scenario, also here we're looking for a 3-wave corrective structure. We have an ABC finished in W, looking for an X. X has to be a corrective structure, so 3 waves. ABC, WXY, triangle structures, anything is possible. But if price moves up in a straight line, probabilities are higher. We're in an impulsive structure. So of course what we are looking for in these two scenarios, pretty much the same, is we are looking for the move to end somewhere, right? Preferably not too high, because then for the bears, that is, because then the probabilities are higher. You're going to take this high here. But you're looking for this move to end, and then you want to see a rejection, and then of course another move to the upside for B or 2 to create that 3-wavy structure. Again, the higher this move goes, the golden pocket is still fine for a wave A or a wave W as well. But if you start going above the golden pocket in 786, probabilities start turning as well, right? So we have to look out for those levels. In the bullish scenario, we are looking for this flat structure in an ABC that is finished. Wave B, most common target hit. 5-wave move in C is finished. Common target C here is respected on top of the target box that we had over here as well, right? Initially they are blue, but after they are hit, I turn them white. And over here we found nice support at the very high time frame point of control, which was here as well. And then we are looking for an impulse to the upside. Of course, in this particular scenario, you do want to see that continuation to the upside. No, so this is a summary of what we're looking for. 3-wave structure to the upside, 3-wave structure to the upside, impulsive structure to the upside. However, also this being a wave 1, can end here, we can move down in 2 and then move up for 3, right? So this can also look like a 3-wave structure, but then the next move up, that is what's gonna impact the probabilities for continuation. You can look for an A, B, C, because now the probabilities are higher for an impulsive structure here. So on the micro, so an A, B, C would be corrective, and then we expect a move down, right? 5, 3, 5. And in an impulse, we are of course looking for 1, 2, but then continuation. Price action is quite similar, right? But the only difference is the C or the 3. and also the B order 2, the corrective structure, the longer wave 2 in time, the higher the probability it becomes a wave B. But this is all hypothetical because we're not even in a corrective structure to the downside at the moment, as price moved up here locally. So then we go to the 30-minute chart, and over here, I remove this. There's a couple of resistance areas I first at least want to mention. First of all, we are at resistance. I also opened the range here. Let me quickly just remove this. No, let me keep it on because it is important. So we are at this resistance area, right? As mentioned earlier, we have the blue box here and the support resistance area in white, which was support resistance a couple of times, right? And that is exactly where we are again. And then we have the blue box. We are just above the blue box, but nonetheless, it's of course about the area here that is important. So that is where we are now. Of course, also for people jumping in because of, a bit of a pump, make sure emotions are neutral and you have a plan and a strategy, and we don't YOLO, FOMO, or catch knives, right? That's not what we want to do, unless catching knives is your plan, of course. Yeah, so this is of course where it starts to get interesting. And let me actually open my Telegram as well, because I've been cooking before actually putting it on the live stream. Right, I'm not going to read at the same time. So for an impulse here, right, if we are looking for this to be a wave 5 in a 1, 2, 3, 4, 5. There's a couple of things going on here. First of all, this wave 4 should then already be in. So this is your wave 4 structure. It's very short. Wave 4 did not reach the 1-to-1. Wave 4 ended either just after the 0.382. Gotta check here. Yeah, just after the 0.382. Kind of like around the 0.5, which is short for a wave 4, as commonly a wave 4 is longer than a wave 2 in time. But in this case, clearly it is not, right? At least if we are looking for a 5, which means that if this is the low of a 4, we're looking for 5, this is a wave 1, this is a 2, we're looking for a 3, we need another range. So in this scenario, we are patient and we wait for a range. Because after a range, you would expect another move to take the high, to then have a 1, 2, 3, 4, 5, finish 5 or A in a bigger 1, 2, 3, 4, 1, 2, 3, 4, and then finish 5. And then you get a correction in a B or a wave 2, right? However, let me remove time. No, this earlier, during the live stream, we also had this on the chart, right? So if you have your wave 3 here, let me remove this now. If you have your wave 3 here, there's also still the potential of a flat 3 wave A, 3 wave B, 5 wave C to the downside. In that case, wave 4 would end after the 1-to-1 fib time compared to wave 2, which would be better for a wave 4. So then we have a wave A, B, C, move down in a C, right? So it's like a liquidity grab. You move down in a wave C. You don't want to hit the 618 here, 40.7. That's an invalidation, as well as this this wave 1 here at 40.5. But this is your first invalidation, 40.7. And then after this, you're going to be looking for a wave 5 to finish A or 1. 1, 2, 3, 4. 1, 2, 3, 4, 5, finish 5, finish A or 1, move down for B or 2. That is a scenario that fits better with a wave 4 because of time, right? So this is the two options for this particular scenario. Either we wait for a range in a 1, 2, 3, 4, and then a wave 5 to finish A or 1, or we're looking for this to be a 3-wave structure and a wave C down. Now, how to know what's going to happen, right? Which scenario? Well, we take a fib from this low to this high. Let me clean up the chart here. And then we keep an eye on the 618. Actually, also this one here. This would be also an invalidation, but preferably the 618, just in case you have double 1-2s. And then make this red. Put the price on. The reason the 618 is important is that if we're looking for a wave 1, 2, and then a wave 3, 4, 5, wave 4 is not allowed to hit the 0.618 unless you're in a diagonal. But at the moment, if we would look, no, an ending diagonal in a wave 5 has to be a zigzag structure in every move. So zigzag, 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 zigzag. At the moment, that does not yet look like a likely option. So the 0.618 in that case is important, 42.3, 42.4K, as well as this high. Because if we're looking for wave 1, 2, 3, 4, 5, we don't want overlap between the high of 1 and the low of 4. So the moment price is dropping and hits this level here, probabilities decrease for a 1, 2, 3, 4, 5 to the upside. Probabilities increase for an A, B, and a C to the downside. Right? Cool. We're not done yet. Don't you worry. Yeah, so this scenario now has a lower probability. We close candles above the wave C, or unless wave X is a flat by itself. So I still have it on my chart, because you could have ABC finished, A, B, C, flat in X, and then get a Y. So I have it on my chart just in case. But here we are looking for a move also to the upside, three-wave structure, WXY. It is then corrective, and then you need a flat here, right? You can't have 4, 5. A flat needs to be a three-wave structure, 3, 3, and then you go down. You don't want to have a 4 and then a 5 and then down, right? Then you're going to be looking for an impulse, and this scenario becomes very low probability. It already goes down. The 1.618 is a common target for C, but a little less common than the 1 to the 1.236, which is down here. So that's good to know. Of course, also in the previous live stream, right, because of this move down looking like a three-wavy structure, right, in an ABC, probabilities were higher, as mentioned last stream, to take the high at a given moment, because we were then looking for potentially either a double zigzag to the downside, a WXY sideways, or of course you have the flat. Now I forgot, what were we saying in the previous stream? A, B, C. So we had the flat potential, double zigzag. Oh no, wait, we hit the 0.7. So that's what we did. Double zigzag was a no, triangle was too early. Was it something like this? We hit the 0.7 here. Let me actually quickly check. Why don't I just check it? Did we hit the 0.7? Did I? Yes, we did. Lol. So during the live stream, I actually wrote this wrong. But then, because the 0.7 is hit, probabilities go down for a double zigzag, right? In a potential WX and then a wave Y. So that leaves a sideways double combo, WXY continuation, or a flat A, B, C in wave X. In both cases, likely a more shallow retracement. 40K would be my main area of support here. Losing that wouldn't be great for the bulls, because then we're going to be looking for levels lower, very likely. And then we get to the most bullish scenarios, because we also need to have this, and then we get to the probabilities, right? As of course I have probabilities. You can already see a folder here, but I'm not going to start with this one. I'm going to start with one that I put on my chart when I analyzed for silver, but I actually removed it. So, but I think it's important to talk about these scenarios now with the pump. So if we have a finished one, right? I just want to explain it. 1, 2, 3, 4, 5. This wave 4 is very short compared to your wave 2 here. 0.382 fib time, wave 4. So inside wave 1, right? You then have your 1, 2, 3, 4, 5, right? Then you have minuscule, then you take fib time from the high here to the low to this high. I actually, wait, standard, which one? Yeah, so 382, right? Wave 4 is 38% the time of 2. Not common for a wave 4. Right? So that's 1. Doesn't really support this scenario too well. Then if we take a fib from the low to the high of the wave 1 here, and we look for wave 2 targets, your common target area for a wave 2 is the 382 to the 886. Well, price clearly didn't even retrace to the 382. It is only rare, like it's very rare for a wave 2 to retrace to the 236 and continue. It doesn't happen often. In other words, probabilities are low for that to happen, right? And in the end, we have a probabilities game. We trade probabilities. Trading is all about probabilities, and the 0.236 is not high probabilities for a wave 2 if we think about a finished impulse. This being your wave 2, which also in time, of course, is crazy. Very, 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 very short. Let me actually quickly check. Yeah, I mean, way before the 382, finished way before the 382. So also preferably in a wave 2, in other words, you would come down at least once more, potentially a flat, right? So not the greatest probabilities here. And then we have the double 1, 2, which I quickly put on my chart here as well, where then you have 1, 2, 1, 2. I actually had to change colors maybe. Yeah, make this yellow. And then you have double 1, 2, right? 1, 2, 1, 2 continuation. Wave 2 here is a WXY. Wave 2 here then has to be a flat. And the reason I then, want to make this a flat because if I do this, wave 1 here, and then from this, it was already set. If I do this, then you can see now the 0.382 is again not touched for a wave 2, which is very rare for a wave 2 not to touch it. And if I move the wave 1 here, let me actually check. God damn, I had it set on the higher one. It still didn't touch the 382. So yeah, it's just very awkward to count also this as a double 1, 2 for then a 3 to the upside, right? It doesn't work nicely. This wave 2 works nicely, yes. It's just that if this is a 1, 2 continuation, a 2, 3, 6 bounce is very rare for a 2. Plus, if this is your finished wave 2 and then a 1, 2 up already, very, very short 2, very, very shallow 2. It's just probabilities which are low. I can't make it better or worse. And in the double 1, 2 here, if we look for this to be wave 1, right? 1, 2, 3, 4, 5. This wave 2 here, time-wise, I mean, can work, I suppose. No, it's also short. Also before the 382, which is uncommon. But also it didn't hit the 382, as I just shown. And if we go to wave 1 here, then time-wise, this is okay. But it's still a very shallow wave 2 plus. Now we have to think about a flat, meaning this has to be a 5-wave structure. But as identified in a previous stream, this looks better as a 3-wave structure, not a 5-wave structure. So the probabilities also for the double 1, 2 are not great. And the probabilities, so 1, 2, 1, 2, 3 up, not great probabilities, right? 1, 2, this is your 3 up, also not great probabilities. But probabilities at the moment, what did I write in? Here, let me actually copy this. Wait a second, I'm copying this from my Telegram. Got to see where I start copying. I copy here. Holy moly. Maybe, no? Text wrap. So now we observe patience, right? Because I understand people get emotional as well, right? So patience to see if a range forms. I explained why, right? With the wave 5. Or if we see some proof of resistance, right? Losing some levels again. For example, hitting the 618, hitting this high. Currently, we are at resistance as shown. The levels above the blue box, I showed them as well. Above the blue box, of course, you also have this high. And you have the weekly level at 43,950, right? Probabilities at the moment are not yet suggesting that we had a wave 1 and 2 finished for a 3 up. or a double 1-2 for a 3 up. Such shallow retracements, but there is the possibility based on the push that we had at the moment. Probabilities would remain higher for a flat in blue 4 or a wave 5 up, as explained, and then down. But we need to see weakness, right? That's what we're looking for. But again, want to see proof of resistance? I always say this often in videos as well. If it goes up on volume and keeps going, we keep going. It's as simple as that, right? Potentially wait for range, be patient, calm, stick to your plan. You know how it goes. So the probabilities at the moment are higher for either a flat in a 4, right, or a WXY, but a flat makes sense in a 4 here, or the 1, 2, 3 very short 4, and then look for a 5 and then down. So we are still expecting a deeper retracement sooner or later, pretty much. And I think, yeah, that's what we're looking for. So either weakness, hit the 618, hit this high, lose the support resistance again, right? Resistance, not holding. Yeah, we can go down. So yeah, there's the potential for a flat in probabilities, as well as 1, 2, 3, 4, 5, finish 1, 2, 3, 4, 5, and then a retracement. Just because, as explained, the 1, 2, very short 2, very shallow 2, didn't hit the 382, which usually is a minimum target. Very rare for a wave 2 to hit the 2, 3, 6 and explode. If it happens, it happens. It's just probability-wise, not high probabilities. And that's in the end what that's all we can do in this industry. We don't know what's going to happen. We trade the probabilities. So probability-wise, not high probabilities for a 1, 2, and a 3. Because wave 2 is so short in time and so shallow, as explained. Not great probabilities for a double 1, 2, and already a 3 to the upside. Because the second wave 2 is either very short and very shallow, or it's long enough, but very shallow, not hitting the 382. So therefore, we are looking for either a flat or a 1, 2, 3, 4, 1, 2, 3, 4, 5, finish, and then get a bit of a retracement to the downside. So these are the two that currently have a higher probability, where if we start to lose some levels, the flat, of course, becomes very interesting. But we first need to lose some levels, no? Up. I'm gonna put this on. I'm gonna put this on as well. Pum 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 pop pop. Just prepping the chart quickly with the levels that are interesting around price. Maybe in where's the range? Yeah, let's hide this. I don't want it too messy. Okay, so we got the key level. Let's start with this. I can remove this key up and the weekly. That's pretty much it, no? Very nice. CVD on the 3 minute. It's only the 3 minute now, of course. So, and we don't have too much going on here just yet. Preferably I look for CVDs on the right side of the recent high here. We had a bit of bearish CVD at the high, but that already played out. arguably you got some bullish CVD with this low here, higher low in price, lower low on yellow, a little bit lower low on blue. Of course, you have the high here as well. And if we are looking for a flat, you could still be looking, of course, for a 5-wave structure. 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, take the liquidity and then go down in a flat structure. But this is the thing, of course, we want to see some proof of resistance. CVD is quite effective to observe what price does at certain levels, or you want to simply lose support levels or resistance turned into support. You want to lose those levels again as price moves down. So yeah, that is basically the probabilities as explained. So let me right now in the chat, as always, Elliott Wave analysis at now chatting and Q&A while we're going to observe what price does together, right? So instead of an update video of like 10 minutes at 7 p.m., we are now live because of the price action, and always when there's a little bit of volatility, I get messages, hey, can you go live? You know, and I know based on the voting a few weeks back that people like it if I go live when there's some volatility, because scenarios change and there's updates. So as long as we don't see any weakness, we just observe and price might go up. And if we see weakness, we see it together. But at the moment, a little bit of bullish CVD here. Higher low, lower low at resistance. And yeah, we just remain very patient, no? Let me actually check if we are looking for a flat, and what is... Oh, we are at the target area as well. This is the target area for a flat here. So that's interesting. Maybe it's quite a high C though, no? Yeah, you're already at the 1.618 for a potential C. Right? Like A, B, C. Even though wave Cs can extend, as we have seen a lot as well. This was a wave C hitting the 3.618 trend base wave extension. A, B, C. that was a wave C. Yeah. Always good to wait for a range. The range is what will guide us, right? That's when we can reassess the probabilities again. So, and that is what we did here as well. And then it hit the 618, probability switch from a 1, 2, 3, 4, 5 to an ABC, look for the high. This was weekend price action, and then we took it. So yeah, we now just see what price does, no? Let's put an alarm, just in case we are chatting and for whatever reason we're not looking at the chart. Let's put an alarm there and put an alarm here. There we go. And now get the chat back up. What's up, everyone? How you doing? I'm not trading based on my gut. My gut is my Elliott Wave counts. So I don't have emotion like a gut feeling, pretty much. Let me quickly see what you guys have been up to here. Scrolling. Okay, afternoon pump indeed. Where were we? We were again the Herc. Thanks for the 40 ZAR. I know, because it's so it's you know, the South African rand. Been there in South Africa, the ditch rudder. Will you timestamp the analysis part of the live stream? Yes. So the previous live stream was just finished on YouTube, like not uploading, but after a live stream it has to, I think people can access it immediately, but it's still doing something. But I will put the timestamps in this one, yes. I'm here to check some analysis from Sir. We just finished. So you were there at the right time. You were there at the beginning, Wade. Also, I'm not trading, but my bot is. That's what we like to hear. That's when you can be sick and still trade, right? Another correction before halving can be a fall to 35k. That would be the bearish scenarios as explained. Yes, that is a possibility. I use ABC, but I also like XTC. Oh, there you go. Using some solid Elliott waves in your sentence there. XTC is an altcoin, right? Why are you part of The Simpsons? Where did I hear this before? I don't. Oh, with the thumbnails. I think Mark said the same. Let's go towards dump before halving, then guarantee bull market. Love your market analysis, by the way. I'm new. Sir, I don't want to check comments. Oh, bro, is that a course? You're a billionaire. Wade, first of all, welcome. Indeed, this is your first live stream here. At least the first time you're writing in a live stream. So first of all, welcome. And I do check the comments, but I only check them after the analysis, so that people that only come for the analysis, they can only watch the first minutes and you know, the analysis part at the beginning, and then they can leave again. So I just want to be respectful of time for people watching, and that they get what they're looking for at the beginning of the stream, and then we can go into chatting and all of the other good stuff, of course. So yeah. Now, preferably, we're going to see some divergences on the right side of the recent high or the low. A little bit of bear divs here, a little bit of bull divs here, but it's a 3-minute chart. So we want to focus preferably on what's happening on the right. And be patient. The whole analysis, of course, basically is done. So we just wait and see. A billionaire? Not yet. Is that a course? Not sure what you mean, but if you're talking about a course, then the gold membership is the Elliott Wave course that I have with all I use and how I do Elliott Waves, plus other tools, target boxes, volume profile, you know, that's everything is in there. I show it in the membership video. The join button below. The VWAP is sitting just above 42,375 level. 42.3. Oh, it's all the way down here. Yeah. But if you go down here before making a longer range that is similar to this one in time. So if you would do and then maybe even take a bit of liquidity, but if you move down towards that VWAP, right? Probabilities are higher. You're going to take the lows here. For a potential flat. Thanks, Mark. Appreciate it. Red John, so is it a good idea to open a short right now? That depends on your plan. I am not a financial advisor, of course. So if you have a solid strategy and a good plan based on statistics that you have recorded over the past months, if not years, to the personal trading plan, which should include multiple tools that you like to use, that you also individually build statistics on. And if your statistics and your process and your entry requirements say, and all the boxes are checked of your entry requirements, that you should enter a trade, you should. But if you don't have anything of what I just mentioned, it's probably best to first develop a strategy and don't worry about trading at the beginning too much because it's probably going to be more losses than wins if you don't have a strategy and statistics. So I won't be able to answer your question. This is really something that is based on your plan and your strategy. You need to wait and evaluate what is forming next. It might still go up before a drop, yeah. And also in Elliott Waves, you have to be very patient. And know what you're looking for. I of course use other confluences as well, right? Support, resistance, time frame, CVD, volume, but that's what I like. Some people like trend lines, patterns, order flow. It can be anything that you want to use. But you want to look for some confirmation according to your plan to enter a potential short, I suppose. Wave 5 pullback. If you're looking for this to be a wave 5, then 1, 2, 3, we still need a 4, the size of this wave 2 preferably, before then another 5 up and down. If this becomes a 3-wave structure, 1, 2, 3, maybe take liquidity at the key level. But if we move down and hit this horizontal at 42,495, probabilities increase to move to the lows here. So below 41.6. What's up? Oh, Zredev, your message got retracted. Oh, maybe this is it. Taking a look at inverted chart in like 4 day gives a nice perspective about the trend. I mean, I'm always very neutral in my analysis as well. I have no bias at all when I analyze a chart, because as I'm not invested in Bitcoin, I'm a day trader, so I don't care if it's 100K or 10K. I just trade the movement, which is a nice position to be in. So with my analysis, I'm always neutral, just following the Elliott Wave probabilities, which of course I think is the best as well. Like if Elliott Waves, based on the rules and everything that comes with Elliott Waves, if a scenario has a higher probability compared to another scenario, it's just the way it is. And you should listen to your analysis, if you know what I mean, right? If your feeling says, oh, we go higher, but your analysis is clearly showing we go lower, there's a problem. But the problem is not, or unless your analysis has a very big bias, because your feeling says, oh, we go up, 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 up. So you're going to try to find scenarios that move to the upside, even though you know it doesn't really look that great, but it's bullish and I feel bullish. You're going to have a problem, right? So you want to be very neutral, emotionally stable, patient, observe the chart for what it is, and then make your choices based on what you see, of course. And at the moment, right, we are here at a bit of resistance, but yeah, we just remain patient, observe what price does here as well, right? As mentioned, a little bit of bear divs here, a little bit of bull divs here. We preferably observe what happens on the right side of the recent high. So no bearish divergences with this high here. Currently ranging below resistance. And yeah, when we put the stream on, the move stopped. So how is ETH looking? Oh, by the way, Mark. Mark always the motivator to make everyone help the channel. Oh, by the way, we were here. Wave 4 expanded flat. That's one of the scenarios we've spoken about. Yes, when a 5-wave move is followed by a 3-wave correction, it can't break the original 5-wave. When a 5-wave move is followed by a 3-wave correction, it can't break the origin of 5 waves in an expanding wave B because it only has 3 waves. If correction breaks the origin, this means the first move was a 3-wave, not a 5-wave. Does this also apply to impulse? 1 second here. When a wave 5 move is followed by a 3-wave correction, you always, so if you get a 5-wave move in any direction and then a 3, so if we have no info about what happened before, if you get a random 5-wave move up and then a 3-wave correction, then yes, you always expect another 5. Based on no context before, this is completely new, we only have a 5 move, then yes, that is exactly correct. It can't break the origin of 5 waves, yes. 1, 2, 3, 4, 5. If you then have a 3-wave correction, you cannot break the origin of 5. Else it's not a 5-wave structure. It needs to be something else. So if this happens, this count is wrong. Can't be a 5-wave move. If this happens, highest probability because we count 5 waves, then yes, you want to see another one. But if price would move down, then this move up, if it is an impulse, 1, 2, 3, 4, 5, it is a wave C, which means then we have over here an A, B, and this is your C. And then we continue down. Yeah, okay, so I get it thus far, right? If correction breaks the origin, this means the first move was a 3-wave. Yes, yes. Does this also apply to impulse diagonals that also have 5 waves? Diagonal W, well, WXYXZ is a 5-wave corrective pattern. You can have zigzags, of course, but the zigzag is always going to be a 5, 3, 5. So of course in an impulse 1, 2, 3, 4, 5, you get a correction and you want another impulse. If this is your first A, if this is A or 1, you want to see at least another C or 3. Unless this impulse is a wave C after an A, B, C flat. And then you expect continuation down. But that depends on the context before the impulse. In a diagonal, right, you can't 1, 2, 3, 4, 5, A, B, C, continuation, wave 1, wave 2, wave 3. You are not allowed to take the low. Now a wave C can be a diagonal in, for example, like a zigzag, right? A, B, and then you have 1, 2, 3, 4, 5, ending diagonal for your wave C, and then you go down below the origin of your C. At least. Likely you're going to take the low of A as well, because we look for an ABC. And the last thing was, what did he say? Oh yeah, WXY, XZ is just zigzags. Or flats. How is ETH looking? I wouldn't really know, as I don't really trade ETH or look at ETH too much. And when there's action on Bitcoin and we have interesting stuff going on, I like to observe what happens here. Yeah, turning the trade around. Some people like it, some people don't, but it doesn't really help me as I have a very neutral bias, very neutral stance. But I can imagine it does help for some people, especially if they're attached to whatever they analyze. We're almost there. Answer this one already. There's no larger 5, surely. We should sweep the low at some point. In the analysis here, we spoken about also the local price action. Just joking. See. Brown buck. So the first 2 bear scenarios failed. What is... on a higher time frame. What scenarios failed? Because so far there's no scenarios that failed on the 4-hour chart. Everything is still, also on the micro, what we spoke about previously, everything is still on. So as explained in the ABC, right, there's still high probability for a B and then a C, or a 2 and then a 3. Only if you get a straight line up to like a 786, that's when it's, probabilities start to change, because then you would need, this is your A, then you need a very deep B for a C ending around 786, 886, and then move down. So that would be a massive range. But going all the way to the golden pocket, then there's no problem for a wave A. Golden pocket, 786, move down. That is also a harmonic. I don't know which one it is, butterfly or some harmonic dude here or girl will know. Golden pocket, 786, continuation of the trend. Which one is that? Anyone here? I only know I only remember the fibs. I don't know the name. So this one is still alive, and so is the WXY. And of course, we also keep an eye on the bullish scenario for a wave 1, 2, and the 3. So all of these, as explained in the analysis at the beginning, are still good. And also locally, here everything is still the same. So if we had the 3 here, as explained in the previous stream as well, we had a few options here. This being the end of 4 is very short. Didn't even hit the 1-to-1 fib time of 2, right? Very short for a 4. And if this is the low and you go up for 5, then you need to see a 1, 2, 3 sideways range in a 4, then a wave 5. Preferably this wave 4, right, is at least the same amount of time as this wave 2, so will take a while. Then grab the highs, move down. Then there's the potential for A or 1 finished, move down for B or 2. Even though this wave 4 is then very short. Or you have the flat structure that we were looking for, or a WXY sideways double combo. Now, because price took the high, you can still have a WX and a Y, by the way, but that's not great probabilities. Better is an ABC in that case. So that is, of course, still alive. That is what we were looking for in the previous stream. And then here, WXY is also still alive. This can still be your C, and in X you can have a flat as well. So there's no invalidations just yet, but probabilities are switching, of course, based on new price action, which is what is covered. Can you talk a bit about your trading strategy when this slows down? Do you leverage or just spot? What do you think about Bitcoin trading pairs? I use leverage, but I use leverage sensibly. risk management is one. So usually my leverage is on a beautiful 1x. I don't trade spot, but it's just futures. If my stop loss is 1% or higher, my position risk is always 1% portfolio. So if it's a 1% or bigger stop loss, I always just trade 1x. And if my stop loss is between 0.5 and 1%, then I have to use 2x leverage to enter the size for 1% risk. So yeah, if my stop loss is between 0.25 and 0.5%, I need to put it on 4x leverage. So yeah. And of course, regarding this trading strategy that I use, so of course one can trade Elliott Waves, but I have a main strategy which includes Elliott Wave stuff, but also other things. And that is the one that I have personally developed based on statistics over the years, carefully put together. And that is what Diamond, what's traded in Diamond as well. So in the Diamond membership, people learn the strat and they trade it. And I can show the statistics, people are tracking it as well. So all nice. And secondly, the goal there is to also help people to develop their own. If there's one thing that's the best you can do, it's probably develop your own personal trading strategy, because a strategy can be very personal. And it's not always easy to use someone else's because you might not be patient enough, or you're a scalper or a swing trader, but it's a day trading strat. And but for day traders, yeah, and in the group, most of the people, they either trade my strategy or they have their own adaptations, or they use some rules and put it in their own. And that works very nice. But yeah. I thought on a larger time frame we would have to have a leading diagonal down on stuff like ETH, filling that lower wing. I think so on ETH we were looking for 2600 because that was the high time frame point of control once it entered the value area. And if I remember correctly on ETH, a normal diagonal 1, 2, 3, 4, 5 doesn't have great probabilities. A triple 1, 2 on such a high time frame, well, the diagonal is possible on I think the linear chart, not the logarithmic chart, because of the size of the different waves. A triple 1, 2 on such a high time frame is not very common. And then of course you have the corrective structure, meaning that the grind towards the upside on ETH on like the daily is a WXY. But yeah, your 2600 is the point of control. If you pass that, you could look to the value area high. I think that was 34-ish is important resistance out of my head. What's up, Christian? And factor call, thanks. Appreciate your comments and also your participation in the chat, mate. Rendering, exactly. Thanks, Mark. I'm such a noob. Thanks, Adrian. Can it be wave B? From the low 38,500 to now? No, so at the moment, right? If you look at, I know what scenario you mean. So if you look here, so if this is your low of A or 1, the question is, can this already be or B? There would be low probabilities. Probabilities would be higher that you still have a bigger three-wave structure coming. Yes. Let me zoom in, by the way. Don't see that too often. If the candle closes red, but CVD is up, there's more buyers than sellers in the candle, but it closed red, which is an in-candle CVD. You don't see that too often, but it's interesting. You saw it here as well, actually. Lol, you see it twice. On a 3-minute time frame, it happens more often. Oh wait, here as well. Holy moly! Here is Kun saying, "Yeah, you don't really see that too often," and he finds 3 examples. Well, generally, you don't really see it too often. The lower the time frame, the more often. But yeah, you know. So answer this one. If this is a flat and it runs up again, what are the targets? Oh, you're gonna, okay, so you're talking about a 4-hour time frame. So what you can then do if you want to know the targets, right? So imagine, this is not yet the highest probability scenario, everyone, but just to answer the question, if you have an ABC here, right, in a flat, and you continue up for a 5, there's a couple of things you can do. First of all, take a trend-based fib from the low to the high, whichever this one is for the flat, but let's put it on here, and then on the low. So from the low of the impulse to the high of 3 to the low of 4, toggle on your 0.618, target number 1, 51.5. Target number 2, low of 1, high of 1, and then low here, and then the 1-to-1, which doesn't make any sense because it's, you know, not above the high. Then you have a Fibonacci that you pull. Let me pull it from this, because also this one else doesn't make sense because you already were here, right? So then you pull it from the high of B to the low of C, and then your common target area, let me actually put this up nicely, it's between the 1.236 and the 1.618, which is between 51.5 and 55.6K. You can also use a channel for targets, but I'm not really a big fan of using channels for targets for a wave 5. I prefer the horizontal structures. And not to forget that also in that area, you have the monthly gap target at 53.3K. So on the monthly, you have this gap, right? All-time high candle on the monthly, move down. Next month, we now have a gap here, inefficiency. You tested a gap once, rejected, now you came back twice. So if you come back again third time, really higher probabilities you fill the gap to 53.3K. Just to answer that question, right? So, yeah. What's up, Barbie? How you doing? How can you tell when there's a top in 5 waves and wave A begins? Since the 5th wave might stretch, what things should you look at to be sure that wave A has actually started? How can you tell when there's a top in 5 waves and wave A begins? Since the 5th wave might stretch. Well, okay, so first of all, an extended wave 5 is rare, right? Most commonly, you're talking about high time frames as well, I think. So most commonly, your wave 3 is the extended structure. So you have your wave 1, 2, and then you have your 3, and then eventually a 4 and a 5. If wave 3 is extended, very low probabilities, you're going to have a wave 5 that is also very extended. So that's, of course, number 1. Second, it's the sub-degree count of the impulse to the upside. So, of course, you count an impulse to the upside, and if this is your high of 5, right, as you say, how can you say it's the top of 5? Well, you count the sub-degrees. You have like 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 3, and then you have a couple of 4, 5s, right? Eventually, you have a big range, 4, you look for a 5. Once 5 is finished, in this case, in this example, wait, I shouldn't say that because of your question. So let's say we don't know if this is the high of 5, right? Maybe it continues. But what now happened is you took this low, or actually all the lows of this range, and this would be your 4. But if this is your 4, in this example, right, and you want to go up for 5, 5 is of course not allowed to take the lows of 4. So then either the bullish scenario becomes a flat structure for continuation, or you have an ABC. But then you have to think about the context and all the sub-degree counts. So if this is a wave A, B, and a wave C, does this flat fit the bigger structure that we're in? Because now this move here has to be a lower degree wave 4, matching another lower degree wave 2. Then you need a 5 up, 5, ABC continuation. We had solid resistance at the high here as well. So the moment you change market structure, We can't have a continuation 1, 2, 3, 4, 5. That's invalidated. And it's a time and price comparison, because every wave 2 needs a wave 4. But of course, every wave 2 has a time relationship with your wave 4 as well, which is taken into account with the probabilities. This is a long range. This wave 2, I don't know the exact subdegree count we had here. 1, 2, 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, 4, 5, 4, 5. A couple of 4, 5s eventually towards the upside. We removed this because it's not relevant anymore. But the probabilities increase for an ABC or a 1, 2, 3 based on the context that you have before and pretty much the whole move up, because we're always counting the subdegrees. And it works best from a subdegree perspective to have an ABC or a 1, 2, 3. Now, hitting the monthly gap for the second time, of course, increases probabilities a little bit to still look for higher. However, we need to see strength, and we don't at the moment. Yeah, okay, we have a little bit of a push, but you know, we're just here, right? So it's a time and degree answer in this case. And if you follow the whole move to the upside, counting each day and filling in the degrees of Elliott waves on the lower time frames and the higher time frames, probabilities are higher now for this to be a 5. Market structure change is arguably is of course an impulsive structure to the downside. There is still the potential as well for an ABC to then have a 3-wave structure before continuation potential, or you go down for, you know, much lower prices. But now we look at this structure here, because everything that happened before, right, is not too relevant based on what we look for. With the probabilities, yes, the A, B, C, or 1, 2, 3, it is, but you know, as explained. But now with this move up here, we are now observing, do we get an A, B, C here? Is this a 1, 2, 3, W, X, Y, right? And this is where we now reassess the probabilities locally. And this is also how different time frames have an effect on one another. So I hope that answers your question. So you don't know the high of a 5 is in until you get a solid retracement. So you can, that's also another thing. This is usually when people sell too early. There's no weakness. So I know that the first RSI divergence was somewhere here. Now imagine you sold here because you got a little dip, right? You see an RSI divergence bearish and you're like, oh shit, you know, we got to move here to the downside of 4%, maybe a bigger one, 5%, 8%. Okay, we're solid, you know. And then what happens? Price moves down and oh yeah, whatever, we go down and la di la la. You're still trending. We're still in 4 5s. We still have bullish CVD divergences everywhere. There's not yet any sign, right? And if we are turning around, so if you want to see lower prices and the potential 5 is finished, what you are looking for preferably is at least a 5-wave structure to begin with, a proper 1, 2, 3, 4, 5, not a 1 candle impulse, but a proper 1, 2, 3, 4, 5-wave structure to then look for lower prices. Here we have 1 candle move down. This is an ABC. Price moved up to the 618. Probabilities are higher to take the high at a later stage. Range. We never had great drops. This was eventually the triangle scenario we had. Then we move up again. A, B, C. I have this big wick, but I know on other charts there was no wick. This move on the lower time frames, 3-wave structure, not a 5-wave structure. We were looking for a flat here in an A, B, C to then later take the high again. Now corrective, and then it's like again you have corrective price action. So what are we looking for? The highs to be taken. We get an impulse down. You see what I mean? It's about trying to find the weakness. You get a 3-wave move down, but we don't know at the time. 1, 2, 3, maybe a 4 and a 5. What did I say? We were live here during the drop. Wait for a range. We wait for a range, hit the 618, taken from the high to the low here, invalidates a 1, 2, 3, 4, 5, probability switch. We're looking for higher. And every time we go higher, we are gonna extend the sub-degree count, right? And of course, it has to make sense in time and price. And then we get a move to the downside here. Potentially, there's an ABC, but there's definitely a call for a 1, 2, 3, 4, and then a wave 5. Reason being, this being a B, X, or a 2 is very, very shallow, as it only hit the 0.236 here. Look, it didn't even hit the 382 from this high to this low. It only hit the 0.236. Less common for B, 2, or X. So therefore, there's something to say for a 1, 2, 3, 4 and an extended fifth. In this case, an extended fifth because your wave 3 is quite similar in length compared to your wave 1. Your wave 3 did not extend. It's just a little bit longer than the 1-to-1, but it didn't reach the 1.618. Increasing probabilities, you could have an extended 5. So you can see that different things should be taken into account when trying to look for a reversal, but in the end we let the chart do its thing and talk to us pretty much, right? FIB time explanation, yeah, was it yesterday? I don't even know. Wait, there was a question about FIB time. Oh, message retracted. I see. Why do you use CVD and not MACD? For me, CVD is the best indicator by a mile. But this is personal preference. Some people like MACD and others RSI. I don't like the MACD, I don't like the RSI because these are momentum indicators and they don't really tell me anything. Yeah, they tell me momentum is decreasing. The problem I have with these tools is it doesn't tell me, it doesn't give me an entry. It only shows me there might be weakness. But how do I, yes, in Elliott waves, you want to see a divergence between a wave 3 and a wave 4, right? Now let me show you what happened on the RSI with this move up. Oh, I need this one. Not this one. I don't even have it in my favorites list. The problem with such tools, which is the reason that I don't really like to use them, but this is personal preference, right? So my personal preference is CVD, but you can use the RSI and you can use the MACD very effectively if it fits your trading style, you build solid statistics, and you know how to use it in a very good way in your trading, whatever your strategy is, right? I'm not saying RSI is bad or MACD is bad or MFI. It's just my preference is CVD, and I'll explain why. Because CVD shows you live market orders entering and like the market, shorts and longs, and you can see absorption live, bigger positions. You can trade with the bigger positions based on CVD. While RSI is momentum, it doesn't show me what is actually happening like at that moment, what's happening here. I can see that on the CVD, but I can see momentum is slowing down on RSI, but it doesn't really, what can I do, right? Your first RSI divergence was here. Price moving up, RSI down, up, down, up, down. I can just up, up, down, down, down. When do we have weakness? This is the thing. It can go on and on and on and on and on. This was your first divergence. If you sold at 35K, you came short another 15K. Same with like MACD stuff as well in these time frames, right? So that is one reason why I don't really like to use it. If you have many 1-2s, you get a big 3, then you get a couple of 4-5s. The problem is each of these little 1-2s will create little 4-5s which have RSI divergences, but it's very difficult to know when are we actually at the high, right? We just have divergence and another one and another one and another one and another one and another one. So yeah, that's one reason. And as explained, it doesn't tell me, like, it doesn't give me a lot of information personally. Now on the lower time frames, you can of course use it for a 3 and a 5, but then again, if you have multiple 1-2s, becomes a bit of a difficulty. While with CVD, it's almost like I'm a marketeer for CVD, but for me, it's just the best tool that one can use. What I see with CVD is what the market does at this moment. Have a look at the have a look here. This is my CVD one pager. I have a whole video on CVD as well, by the way, on my channel. You just look at the videos, search for CVD, and you'll find it. Basically, CVD, I can see what the market does at that moment in time. Line moves up if there's more buyers than sellers in the candle. Line moves down if there's more sellers than buyers in the candle. I can look for CVD divergences and absorption. Absorption equaling bigger positions are absorbing market longs or market shorts to then turn price around and move in the other direction. You can see this absorption on the CVD, which will help you with your trading if you manage to use CVD effectively. Not every divergence is a tradable divergence, of course, else everyone would be, sitting on the beach. But you can use this tool in areas where you have support resistance, or when you're looking for potential tops, or you use it in confluence with other stuff, preferably support resistance stuff. And then it becomes very effective because you can actually see what the market does there. You can see like, hey, we have, right, I have to zoom in here, bullish CVD, hey, we drop down, we go down, 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 but we're hitting support, we have a move up, bit of a retracement, higher low in price, but hey, CVD is a lower low. What does it mean? That means there's more people selling this retracement than people were selling at the low here. That's weird. There's more sellers, but price is not down below this low. There might be some absorption going on, and we are at support. So, okay, you're going to find some confluences and maybe whatever else you want to add, and that can be a potential move, no? Again, it's not 100%. You need experience, you need context, but CVD gives me information about what is happening now, and I just can't use RSI the same way I use CVD. CVD gives me relevant information, while the RSI just shows, yeah, momentum is slowing down, but it can still move up another 15K. But this is personal preference. I know that people can trade amazing with RSI and with MACD and the money flow indicator, but for me, it doesn't work. It's not one of the tools I like to use. And this is why I said, also last stream, is a personal strategy is very personal. And when you build a strategy, you first want to try as many stuff as you can. RSI, MACD, MFI, CVD, anything. You want to use all the different things. So I used RSI and MACD and VWAP, and I used it all. But then what you want to do is find your favorites and build statistics. So then you start building statistics after finding your favorites. And I found my favorites, build statistics, and eventually you combine a whole lot of stuff, and then ta-da, strategy, right? Takes a couple of months, if not years, to build a strategy based on statistics, but it pays off. But I also know people that build a strategy with RSI. I know someone that has an amazing trend line strategy, trades trend lines very effective. So you don't have to make it complex. You don't need a lot of stuff. You can, if you want, you can use order flow, you can use the DOM, you can use anything that you like. It's just personal preference. So for me, my preference clearly is the CVD and not anything else. I don't use any other indicators. What's up, Kenny? We had a break in between, but we had some impulsivity. Mirovsky, if you find it boring, then of course you're welcome to not watch. Look, if people want to look at ETH, then feel free to go to another channel and look ETH. If I want to do ETH, then I decide I do ETH. But the main coin on this channel clearly is Bitcoin. And if people don't like it, they can go to another channel to watch ETH or another altcoin. Sometimes we will do ETH, but I'm also here to answer questions while keeping an eye on the main thing we have on the channel, which is Bitcoin, because Bitcoin is the main thing we focus on here, which for me is not boring. And if it's boring for others, then there's many other channels I can imagine. So, yeah. What's the probability after this move? Make sure to check the analysis at the beginning. This must be the Gardley. Yes, it's the Gardley one. That's true. I need to see it. This Golden Pocket 786. Christian, welcome. I'm new to the channel. I'm really enjoying it. I just have one question. Using this LOT, what confirmation do you need to enter your trades? Well, from an if you trade solely based on Elliott waves, you always trade your highest probability scenario, which is not talking about like your confirmation can be anything. So if you're looking for an impulse 1, 2, 3, 4, 5, and then a retracement in a wave 2, this is your wave 1, you're looking for a 2, then your target area, your common target area for a wave 2 is between the 0.5 and the 786. Right? Now, if one has if this is your preferred highest probability scenario, then there's a couple of things you can do. You can say, okay, well, I know the 0.5 is the minimum target usually for a wave 2, so I'm going to do this and I'm going to look for a wave 3. Or what you're going to do is you wait for price to reverse and show you a small little 5-wave move and a retracement, and then you're like, okay, this might be better, right? So I might have a little bit of a better entry. Or maybe in your case, you have additional confluences. You have the golden pocket here, you have the VWAP here, you have some other confluences. You know that in this area, there's a potential wave 2 forming based on, hey, we have an impulse up. There might be a 2, that's your highest probability scenario. But inside this area, you have identified another separate area which has the best support. So if you want to enter somewhere, you're going to do that at the best support, and then you're going to do this, bit better risk to reward, and then you're going to look for a move up. So confirmations can be anything depending on your style of trading. But from an purely Elliott wave point of view, it would be the target zones. But these can be quite big, especially when looking for ABs. If you have a wave A, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5 in a wave A, and you look for a B, your B target area is the 382 to the 886. So then, well, I'm looking for a wave A. Okay, well, the 382, price can bounce at the 382, looking for a C, but then your stop loss is massive. So your risk to reward is usually not that great. So confirmations can be anything depending on your personal preference. At which price level the probability of going doing is most high? I think that's down, I guess. That depends on the scenario you're looking, right? Currently here, we are at a little bit of resistance and we are observing what price does at resistance, right? A little bit of a range here at the moment. So yeah, there's the potential of bearish CVDs forming, but I always like to give price some time as well. So now on the right side here, right? Lower high, higher high. My preferred is 15 minutes. So, but from a bigger, like if we zoom out and I put my target boxes on again, then for me, this area here is very interesting, 45.9 to 46.7, if price can make it. But that would be after a potential bigger 3-wave structure. And then we have to observe the reaction patiently and wait if we see any proof of resistance, any weakness on the chart. Leverage is overrated. Well, usually I guess it's used in a wrong way where people with a small portfolio tend to use high leverage because they want to earn money. But that's a money focus and not a process focus. Usually people blow their account or they lose too big and they can't come back, or they start with 50x but then they lose, so they go to 100x. You know what I mean? It's not about... So if you have a small portfolio, learn the fundamentals of trading. With solid risk management, a good strategy that you have to develop, of course. And then learn about the fundamentals, good leverage, good strategy, risk management is solid. And then the money will come, because the money you are using to refund your blown account all the time can be the money you use to fill your account when you actually got a solid strategy, solid risk management, and then you can increase the budget of your account to eventually trade your personal developed trading strategy. So I think leverage, depending on the strategy, can be used, of course. I mean, there's in the industry, and also friends I talk to in DM, they trade with 10x, 15x, 20x, which is normal for them, but they have a strategy around this and good risk management that makes them take these leverage trades. Of course, at the beginning, also when I was at the beginning, I used leverage, stupidly high stuff, just focusing on the money. I didn't know a thing about trading. I was one big noob, and I think many people can recognize themselves. If you compare yourself at the beginning to where you are later, at least if you survived your first year or your first few years, it's a big difference. Where can I sign? Factor call, the join button is below the stream, and that's where all the information is. What's up, Kalar? How you doing? Welcome. So I'm here to watch again. Thanks for the explanation. Pleasure, Brown Bug. Pleasure, BRNX. Yeah, round 2 indeed. Loch Ness shape, head out of the water. You are here again. Yeah. Got some questions also in Discord. Can you go live? You know, are you going live? So yeah. I fell asleep. Hopefully not during the live stream. Else it would be boring indeed. Maybe a band-aid. You talk a lot about rules. Is there like a cheat sheet or a book I can reference on the rules? You mean maybe a band-aid Elliott Wave rules or entry requirement rules that you make yourself? So are you talking Elliott Waves or just generally rules that you develop for your strategy? Would be good to know. The bears doing 4 hours. Was my cue to look on the lower time frame for a short. Yeah. So it can be very relevant in the hands of someone that uses it as a tool with other confluences. For me, it's, I don't know, it's personal preference. I've never been a big fan. It's a higher high and a lower low during a run. So much to gain every day. 42 was a good level. 43 is on trial. Yeah, we are at resistance here. That's correct, Marve 2.2. In general, investors expect some returns on daily outflows to Wall Street after 30 days. Potentially, yeah. I'm not sure. I'm not a fundamental guy, so it would be difficult for me to really talk about news or Wall Street or those type of things. But you might be correct, yeah. And RSI can be very, very... So also RSI, MACD, those can be incredible tools. You can be so profitable using these tools in the hands of someone that likes to use these tools. So are we going down from here? It's all probabilities. And the probabilities at the moment are higher for either a flat ABC or 1, 2, 3, sideways 4, corrective structure, 5, and then see a retracement compared to bullish structures in a wave 1, 2 continuation or a double 1, 2 here. It's all probabilities. Analysis, of course, at the beginning. I heard you are playing for an Elliott Wave course. Why don't you say Udemy? Yeah, it's one of those platforms. There's a couple. So of course, I always look to improve the quality of what's in the memberships, right? So we have the course, but I want to. It's the videos and everything is, you know, all in detail, very nice. But I'm first of all looking for indeed a platform where I can also make, like, I can upload exercises and charts and examples so people can actually really practice it, and maybe a bit of a test as well, which would improve the course. And I also want to make 1 minute shorts about the different Elliott Wave patterns. So instead of watching a live, we're live streams, but in 1 minute you have ta-ta-ta-ta-ta. Of course, it's not in detail, but it's very, very easy. So that in gold, people can quickly refer back to, oh, what was that zigzag thing again? Oh, wait, let me, yeah, just very quick, very easy. Grabs popcorn. CVD is legit. Yeah, but it depends on, I guess for me it works, maybe for others here as well, but maybe for others it doesn't. It takes time, just like with RSI, MACD, and MFI and anything else. It takes time to really learn how to use it, and then of course does it fit your personality and what you're looking for in a strategy? And for some it will, and for some it doesn't. But for me, yeah, it's legit. Salman, CVD is new to me, but surely we'll look into it as watch your brief video about CVD. Yeah, nice that you watched it as well. It's my most watched video, but not really a surprise, as I always highlight it at the end of my my videos. What's up, Nick? How you doing? Welcome back. Where's that cheat sheet? In the welcome, good to know channel here. So this is the website of AG, like, you know, CVD, AGGR here. This is the one pager where you also have a link to the video. And then this is my template. So you can access it there. Popcorn. In a bull run, they pay long-term investors at the bottom of a dip and on the lower highs. With Wall Street, you're talking about investors, right? They pay long-term. It's quite. I'm always interested to learn, but I'm not really sure if I understand. They pay long-term investors at the bottom of a dip and on the lower high. But of course, if price moves up, you want to get paid more, I suppose, if it goes up. I bet when you close your stream, price will go crazy. Yeah, yeah, I'm afraid it will. My fiance just came home, so definitely have to spend some time with her tonight as well. I bet when you Koens with Atlas templates, which line shows the... Oh, I think you tagged me, but I'm not sure when I saw it, and I completely forgot about it. Let me show you. I'm going to start up Atlas Jarvis. Let me show you. The gray line shows the daily naked point of control, and then on the other template, the yellow line is the weekly naked point of control, and the purple line is the monthly naked point of control. I'm starting up. I'm going to show you. Any free CVD indicators in trading view? Ooh, I don't know. So, so far we have not yet found a CVD indicator on trading view that is good enough compared to what we have on AGGR. Actually, with Diamond, we've done a little bit of research, but we haven't really been able to find it. If daily candle would close below 24,800, would it be bear 24,800? Okay, 42,800. I see. 42. No, that wouldn't be a problem on a local. Of course, 42,800. If price would close down here, I mean, it depends on what's going to happen in the coming hours. But if you move down and hit the key level here, likely you're going to take the lows, probabilities for a flat here, ABC, and then continuation up at a later stage. So for then a wave 5. So it wouldn't be a problem at the moment. A time predict, challenging prognostic. Wait, connect. Okay. What do you mean, W? Bro, sometimes hard to recognize if the move is impulse or triple zigzag. Stick with the impulse first, because a triple zigzag is a very rare corrective structure. You rarely ever see a triple zigzag. So if you're, and also of course, so triple zigzag, right? Zigzag, 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 zigzag. This is a very different structure compared to. So there's a big difference, of course, between the two. Sorry for the flashing. Atlas is starting up here. Select layouts. What are we doing here? Ah, there we go. So a triple zigzag is never has the highest probability. So if you do have difficulty, start with an impulse and or an ABC / double zigzag. Double zigzag is less common than a zigzag, but it's at least more common than a triple zigzag. Look at my other screen so I can get the point of control stuff up. Okay, so Jarvis, you're probably still here. 1 second. So yes, Jarvis, it's in gold. But I also I have one on public YouTube, but also one in gold in the playlist on YouTube, or in the playlist, not on YouTube. In the channel, in the channel playlist here, and that is where in Elliott Wave theory. So with regards to Jarvis point of controls, right? You can of course see all the point of controls, but the gray line here, 40.1 daily naked. Here is another one, 39.2. Don't look at this one. It has been traded through, right? You see, this is the one of yesterday, but then today it already touched. But because the day is not finished, you still see it. But of course, it's invalidated. This is the current point of control of today at 42,200, right? So this is, and we don't have any dailies above. But then you can go to the weekly, and then here you can see weekly 46K, 40K is another weekly here. We got a weekly 37.7, monthly 37K, weekly 34,450. So yeah, this is how to use it. And I don't know, I haven't seen the picture. You may have to re-tag me for me to see how your template looks like. It should be good, I guess. But if not, you may have to go to the settings. So you right click on the chart, you go to indicators, and then you open the indicators, and then you get a window with two boxes on the left, and in the lower box it says TPO, and that is where you can then you click on TPO, and then on the right side you see the settings. We can definitely chat about it in a diamond chatting session as well. We are where were we? We were. Daily highs, daily lows has been a sideways trend, support with little or no drawbacks. Daily highs and daily lows. Yeah, during the uptrend, of course, there weren't too many bigger retracements. At least if you stick on the higher time frames. On the lower time frames, you had some 8% moves, but on the daily, it still higher lows and higher highs and higher lows. What if someone don't mark the high as flat B, but 3? Is it possible? Yes, but then you have to look for 4. Oh shit. I'm so sorry. I thought I pressed the button on my keyboard to mute my mic because I still have an itch in my throat. Sorry for this. Yeah, you can get that mistake, yes. So that you have here, right? Instead of a flat, you're looking for 1, 2, 3. The main thing you're going to be looking for is actually what I have on my chart. So if you look for 1, 2, 3, 4, 5, you're going to be looking for a wave 4. Wave 4 is not allowed to have overlap with wave 1 in an impulsive structure. And another thing that you can look for is the 618, because currently the highest amount of volume is in this recent move here to the upside clearly, which means you want to see at least a 4 and a 5 in a bullish scenario. But if price is going to have overlap with wave 1, it invalidates a wave 4, plus the 618 is also an invalidation for a wave 4, unless you're going to be looking for a 1, 2, 1, 2, and then a 3. But that's not really something we're looking for at the moment with the impulsivity here, the amount of volume. This wave is longer than that wave as well, diagonal. So this is how you can, how probabilities change if you move down and hit some of these levels. I fully agree, Cello. That's what I meant. Vegans, when is a good time for a short position? That depends on your plan and your strategy. For sure, I will stay with your ideas. Don't get me wrong, but as I remember you said, once that you're going to add some alts, but not on the channel. So, of course, no hard feelings, Mirovsky. But on the channel, this channel will always be fully focused on Bitcoin because that's what I trade. However, in my trading, I may add Ethereum, Solana, but the channel will always be Bitcoin only. I'm currently still only Bitcoin. So even though my trading might add some, the channel is focused on Bitcoin. Sometimes we do altcoins as well, and there is still the big altcoin stream coming up, 5 or 6 hours of doing alts. But that is just something that I then do once in a while. So not consistently. So Bitcoin is definitely the main focus. And it works best as well for my time because adding more, if I would make videos on different alts as well on this channel, it takes me a lot more time, which means I have a lot less time for the community, engagement, answering questions, and yeah, I feel this is the best balance. And I'm a global keynote speaker, so I also have events, and yeah, I do other stuff as well, of course, outside the chart. So the answer here was yes. I can also link it to you if you can't find it. There's positive news about Hong Kong ETFs for upside. Don't know what the effect will be on price though. Luca, hi. Can you do a video for using trend-based FIB time? I don't really know how to use it. I have kind of done it in a live stream. So yes, I have a video about it, but it's in gold because that's where the Elliott Wave course is. But you use FIB time by identifying the beginning and the end of a wave, right? Well, beginning to the end of a wave. You identify the start and an end of a wave. Once we moved up, it got quite clear. You take a FIB time from the start to the end of the first wave structure. And if I double click here, I am now comparing this move with this move. There's 3 clicks when you use FIB time. So if I have a pivot here and price moves up in wave A, B, and I'm looking for a wave C, right? Now I take a FIB time from the start of A to the end of A to the end of B. Your first 2 clicks select the price action in time that you want to compare a future structure with. So first click, second click. So this is the area that you're going to compare with whatever you're looking for. The third click is here because you want to compare what's coming in C with your A. So 1, 2, 3, and you look for, you know, the probabilities for your wave C, the time probabilities. And if you're looking for a wave 1, 1, 2, 3, 4, wave 1, and you look for a wave 2, you then take a trend-based FIB from the low to the high of 1, and then you double click here because now you are you want to compare wave 1 with wave 2, or actually wave 2 with wave 1, but wave 2 is forming, so you just keep an eye on time. So you click at the low, click at the high, select the wave 1 in time, and then you click at the high again because now you just want to compare the price action of 2, what happens after, with your wave 1. So that is how to use, in a nutshell, pretty much, how to use FIB time. Where do I get the Atlas template? It's in Discord, but it's actually in the general chat. Maybe I have to change that because I haven't really made a video about it yet. So I actually still want to do that. Maybe I have to go. There we go. Ta-da. So Google's decision to allow advertising for Bitcoin provides these financial instruments to a wider audience. A wider audience, that's always interesting, especially with the ETF announcement. A lot of hype, but then a very nice move down. So with the extra advertisement, more liquidity, maybe run it up once more, grab the 50K liquidity, people shouting all-time highs, and then move down back to 30. Interesting. Erdim, love the content, been interested in order flow with volume bars lately. Have you had any experience? I have experience with order flow, not in a lot of detail, but I know how to read it. At least I used to. I haven't used it for a while. So I don't use it myself, not anymore, because for my way of trading and my strategy, it made it unnecessarily complex in a way. But I definitely see the value in using it because you can see so much detail. Now, I don't know the volumetric bars, but I know order flow, yeah. Jarvis, since it's not Coinbase chart on Others, how do you put it on your Coinbase chart? I just use the same levels. It's just the same, yeah. I never changed it. So, yeah, and it works. So yeah, I don't know. It's indeed, it's the Bybit chart, because back in the day when I started, I used that, but like that chart, but not anymore because of the strategy, and this chart works better. So yeah, you're correct. It's two charts, but I just put that exact level on my current Coinbase chart. And you know, as you know, it's very nicely respected. Yeah. Yes, AGR is a free website. BTC update. Yes. Elliott Wave analysis at the start. Elliott Wave rules, I guess. Oh, if you want to learn more about the rules of Elliott Waves, there is 2 sources in the description that are free under the education title. So there's 2 websites. You have bit.ly Elliott Wave detailed and more information. Start with the detailed one, which is by far the best one, which is this website here. I read this as well, by the way. And then, yeah, this is the best website that I found when I, studied Elliott Waves. The WXY section is a bit meh here, complex, but start here. That's what I would recommend. And you also have these type of pictures. It's great. It's such a good website. So start here. Then you have the other source, of course, that I have in the description. And then you can also have the Elliott Wave book, of course. Elliott Wave Principle, Frost and Prechter. It's a nice to have, I suppose, if you like Elliott Waves. I mean, you won't learn too much. Yeah, there's a few things you learn. I mean, it's just good to have compared to the website. It's a nice addition. We are still forming bearish CVDs here at the high. And that's where I would start. So the free sources are the website. The book, of course, has to be bought. And then you have my Elliott Wave course in gold. You're shilling. Now, most people, if people do enter for gold for the course, then they're usually only there for a month. Because it's easily doable in a month, and then they remember gold for a month, and then they go diamond, silver, or quit. Finally, thanks for the fibbing. I didn't know where to put the third click. Spend again 1-2 hours with that. There you go. Hey, Brownbook, you can always ask me a question in gold, of course. Is your Atas Bybit futures or spot? Futures, as far as I know, at least. Yeah. It's so long ago that I went into this, but yeah, it's the futures. Wait, it is, yes, because it is, when you open the template, you can see as well USDT and USD. Oh wait, do you have those templates? Yeah, it's futures. So are we dumping or pumping? You're talking about probabilities here, which of course is covered earlier. But in a nutshell, we're looking for a flat, ABC, or if we are looking for a 5, then a 1, 2, 3, 4, 5, one more high, and then a bit of a retracement, as the probabilities for impulsive continuation in a 1, 2, 3 up or 1, 2, 1, 2, 3 up are not high. So there you go. Okay, everyone, that being said, it's time for me to relax the rest of the night, spend some time with the fiance who came home as well from work and made some business steps today. She is starting her own business and used her network effectively today to get some stuff done. Is there any point of monitoring spot CVD? Yes, you can use spot as well. Recommend first gold, then oh my god. Recommend first gold then diamond or straight diamond if you're relatively new. If you want to learn Elliott Waves, gold is the place to be. If you want to know more about building a strategy, tracking statistics and data, learning more about my strategy and how I have developed it and also traded, then diamond is the place to be. So it's more like, what are you looking for? If you want to learn all about Elliott Waves, gold. If you want to build your own strategy or use mine or learn how I did it or use elements of mine or try and develop your own you know, that's diamond, where we all also always look for other like strategies. So yeah, it depends on what you're looking for pretty much. So okay, what time frame do you use mostly? 15 minutes. 15 minutes. Can you show your CFD indicator? I don't use it on TradingView. Mine is AGGR. This is the final question, everyone. This is the AGGR website. You can go to my YouTube channel, go to videos, look for CVD. You can go to Discord, look at this link here, click on this one pager. Also, the YouTube video is here. And then you have my template down here. So it's another website. It's not TradingView so far. I have not seen and found, together with Diamond, any TradingView indicator which is as good as what we have on AGGR. So yeah, I was live again. Yeah. So yeah, that being said, everyone, thanks for being here. I appreciate you spending some time with me earlier today, and now again. Let's see what price gives. I'm going to quickly put the time stamps in as well for the analysis at the beginning of this video, so that people that watch the VOD can immediately find the analysis part. And yeah, have a good evening, morning, afternoon, night, wherever you live in the world. Of course, in my case, it's evening. So have a good time. And tomorrow morning between 7 and 8, somewhere there, we have another update on Bitcoin. So let's see where we are then.